in place where people want to create and have generational wealth. They want to have and create generational wealth, and I think I heard one of the ladies on the right, so that's what she wanted to do, was create generational wealth. And so I'm a big proponent and supporter of creating generational wealth. I'm a second generation realtor, so everybody, I think I tried to introduce myself to everybody. I didn't see you when you came in. My name is Miss Lola Slater. I am the founder of Build a Community 2, and then right here, close to Baltimore, I just thought it was like cute, just saying 2, because this is my second event. Helping you guys do multifamily and investment type purchases. And so, as I said, I'm a second generation realtor. I've been around real estate for almost like 20 years, and that is a very long time, almost more than half my life. Just being exposed to the community, getting knowledge, getting education, and purchasing, right? Because for myself and my community, buying a home, you kind of don't know where to start. You don't know where to get financing, you don't know if you qualify, you don't know the process, and having somebody sit and explain it to you just doesn't happen often. But then I discovered, well, what else could we do to advance the movement, It's more than home ownership, right? Wealth is about, I would say 40 acres and a mule, right? That represented wealth. Because if you all have 40 acres right now, could we agree that your economic level will be different? Right? You'll have some businesses, you'll have some apartments, you'll have some houses, it's land, you have some commercial space. It is wealth. That's what real estate represents. Real estate represents wealth, something that will go on and get passed down generation after generation after generation. Okay? And so if you guys, everyone has one of these in front of them, and online you guys see it. That's me and my background, which I just told you about, but I just want to give you information to everybody that's here. Mr. Daniel Peak will be speaking today as well. He is a lender, a trusted lender, I must say, who, again, my mom trusted Mr. Peak and used his services. So when I became licensed, I kept it going, right? So he serves our family for 2 generations, and he's licensed to service all of the states that are online, and of course, in the room, okay? We also have, who just did the icebreaker in front of the room, Ms. Jasmine Thomas, she's a licensed real estate agent, but she started her journey, I was selling her mom's house, and she said, hey, I want to get started in real estate, okay? I said, okay, so what do you want? She said, I want properties. All right, great. So for Jasmine's first purchase, it was a duplex as well. So you guys will be able to hear a testimony from her and how her first purchase went. So she too is a first-time landlord. We also have Ms. T-Shawn Samuels. T-Shawn Samuels attended our first Build a Community event back in November. She is a Washingtonian, so from the DC area, and when she attended our event in November and January, so just 2 months later, she was able to close on her first multifamily. So you guys are going to hear from Ms. Samuels as well, and she'll go over her numbers. You have in your books in front of me some notes online. I hope you guys have some pen and paper, can take some notes. I'm going to go over all of the information. So for connectivity, you guys give me one moment. Online, you're fine, but now it's in the room, so y'all got to give me a moment. Let me get one. All right, y'all give me one moment. This USVI situation is really important right now. Text Jasmine. Okay. I want to get y'all slides in front of y'all. I can talk to y'all, but I want to not talk at y'all. I want y'all to really learn and take these notes. And I want y'all to come out with a business plan. Because a lot of times we do business plans and they think about business plans for the purposes of what? Starting a business. And people don't really look at real estate as a business, but it is. Anything that produces cash, generates cash flow, is a business. So when you think about your purchase, like, I think Mr. P, how many properties you said you wanted?
Just 10.
Just 10, modest. How about you? How many properties you want?
And I can get
And you gotta, no, you need to target. How many properties you want?
maybe 5 a year, that's good.
5
10 a year, 5,
Okay.
10 a year.
And we talking about units or properties?
Properties and units.
Properties, and, okay, so we had him on the line. He said he wanted, 5, and he wanted at least 2 to 3 in each. So that would give him, say if it's 3 in each, that's 15 doors, right? So think, like, really put a target on it. And I want you to write it down. Turn to your notes section. Write it down. I want you to write how many properties do you want? And we talking about multifamily, that's how many units do you want? And online, if you guys can do the same thing, right? How many units you want? Because what's really important is choosing the correct investment vehicle. You know, you guys can do fix and flip. I heard someone online say that you've done wholesaling as well. Any other people in the room done wholesaling before? No? Okay. So wholesaling, then it's a buy and hold strategy. You can do residential, you can do commercial, you can do land, you can do condo conversion, right? Real estate is vast. There are several different streams or avenues you can take, but today we're going to focus on buy and hold, okay? So, single family versus multifamily. What are some benefits that you think come from getting a single family home? A single door, whether it's a townhouse, I should say single door. So whether it's a townhouse or it's a condo, I mean one door, or it's a standalone building, what are some benefits that you guys think come from getting a single family?
Can you repeat that?
Benefits of a single family. So we're talking about buy and hold, right? We're going to buy a property, we're going to hold it. We're not going to fix it and flip it, meaning sell it, right? It's not land, we're not going to develop, right? It's not, we're not taking a row house and making it into 5 condos. We're going to take a single door.
I was answering your question, go ahead.
Okay, I was just going to finish explaining. Okay, we're going to take a single door, right? And we're going to buy it and we're going to rent it out. What are some benefits, and that's going to be compared to multifamily. What are some benefits of having a single door?
Residual income. Residual income.
Residual income, okay.
Passive residual.
Equity.
Equity. What are some benefits of a multifamily?
Same thing.
Double the income.
Double the income. So if you got 5 properties and all are single family homes, right? But then you got 5.
No, go ahead.
You got it?
Remember, no, you just make me remember something.
All right, you got 5 properties. All properties are single family homes. But then you got a duplex and a triplex. You still got 5 properties, right? 5 doors. You got 5 doors that you own and get cash flow from. What are the benefits? Tell me, what do you think the difference is if I got 5 different houses and 5 different zip codes or 5 different cities, 5 different streets, or I got 2 buildings that's on 2 different streets?
You know this, right? We have a multi-family home. Correct me if I'm wrong. We have a multi-family home. We're only paying mortgage for one house, but we're paying like 3 different rents. Like not 3 different rents, but say you charge the
3 different loans, right?
Yeah, say you the rent $1,500, you're getting $1,500 from each tenant.
Yes.
But the mortgage on the house might only be $1,500, so we collect like $3,000.
From it. Okay. So he's 3 different mortgages.
Single family homes value appreciate faster than the multi.
Say it one more time, say it loud for me.
Single family homes value appreciate faster than the multifamily.
Single family home appreciates faster. Did y'all hear that online? A single family home appreciates faster than a multi-unit home. That's actually correct. What else? What's the difference? So, what's something that can happen in the house? Right, you're a landlord. What's something that can happen? You guys rent apartments now. What is something that has happened in your apartment?
Air conditioner.
Air conditioner went out. Who said that? You can't say that. She said that. She showed me that.
You have to pay for repairs and you know. repairs, handyman, maintenance fees,
Yes.
pre-maintenance, and routine maintenance. You gotta pay for all that.
Yes. If I got one roof and 3 units under one roof, that's one replacement. If I got same 3 doors, same 3 units, 3, but I got 3 different single family homes and the roofs need to be replaced, I'm replacing how many? 3. Is it more financially profitable or economic to replace one roof over 3 tenants or to replace 3 separate roofs?
One.
That's the benefit of multifamily, right? Make sense? Let me see. Something else I want to talk about. All right, scalability, right? Because sometimes when a lot of people get started, they just get one house. Hey, I want to be a landlord. They get one house. But it isn't scalable. You get a larger pool of tenants when you get a multifamily. Because you can get a 4-plex, you can have a 2-bedroom, a 3-bedroom, another 3-bedroom, and a single bedroom, right? All under one roof. A single family doesn't allow that. A multifamily does. Okay? So it's more scalable. Your business is more scalable. And by scalable, I mean, let's think of a franchise, Starbucks. Right? That's what scalability looks like. One location, and when the owner of Starbucks scaled it, they put out multiple locations. So in terms of real estate, when we're talking about scaling your business, how do you scale in real estate? If you own a single door, that isn't scalable. But when you go into multifamily, you are scaling your real estate business. So scalability is important, and that's what's possible in multifamily. Okay? Online, you guys hear me well?
Yes.
All right, awesome. All right, I got some terms in the room. You guys got to write this down. NOI. NOI. And online, write it down too, although y'all can see it. NOI. We'll take a screenshot, but write it, make sure you remember. NOI. What do you guys think that means? And we're talking about. We're talking about real estate, profitability. Anybody know? It's okay if you don't. Net operating income. Net operating income.
The net.
Operating income. Everybody got it? All right, CF, cash flow. Cash flow, cash flow, cash flow. Okay. All right. Grant Cardone, follow him, follow him, follow him, follow him.
You spell his last name?
Cardone. Now he's gonna tell you don't buy a building under 32 units. However, he's well advanced in his investing career, right? But it's all his favorite thing. It's all about the cash flow, baby. That's all it is about. Is the cash flow, money that's coming into you when you're not going out and working. Period. Right? When people talk about the recession's coming or the market's shifting, guess what's not shifting? The rent people pay every single month. Can we agree? People gonna pay rent. In a recession and progression, rent always will get paid. All right. Cap rate, capitalization rate. So write that down. Cap, like a baseball cap rate. You know, let's see all this over. Somebody got 2020 vision over there. Cash on cash return, which you guys already talked about in the icebreaker. Another term for you is BRRRR. BRRR. That stands for buy, renovate, refinance, repeat. So you hear people talk about the BRRRR method, right? They're just saying, hey, buy, renovate it, get your money back, and do it again, and do it again, and do it again. That's typically done on single family, yes.
So like when you do that, so say like you get like a three
Unit.
right? You can get a first time home buy as long as you live in one of them.
I mean, we about to get home. We want to move out the way.
Oh, my
I gotta give you some terms. I want y'all to be able to speak the language. Or somebody, when I go, because if you get a building, or you get your 2 to 4 unit apartment building, and somebody, you talking to somebody, and it's like, oh, what's your cap rate? And you looking like, You don't know what the cap rate is. You're not even familiar with the term, right? I want you to be familiar with the terms. Get familiar with the terms. Alright, and so what is a multifamily property? We already talked about it, right? It has to contain 2 to 4 units by definition. That's how FHA, Federal Housing Administration, defines it. Being a building with 2 to 4 units in it, a residential building with 2 to 4 units in it. And it's a great way as new investors to get started. Alright, house hacking. Tell me your name again.
July.
Williams. Jason Williams. Mr. Jason Williams. Jason Williams just talked about something known as house hacking. Anybody heard the term house hacking? No? Huh? You heard of it? What is house hacking, Mr. Williams? Online, have y'all heard of house hacking? I think we're going to put everybody on mute. Say something in the chat, say something in the chat. Have you heard of house hacking?
I'm familiar. I know there's a lot of different ways to do it. Like you can buy a single family home and rent out every room inside the house. I've seen it done that way also.
Okay. What was the first way?
With the bear method.
But you mentioned something at first. You said
Yeah.
what?
You get a FHA loan for first time home buyers loan. To buy a multi-family unit, but you have to live in one of them for like a year or something like that.
Okay. Keep going. I'm listening. I'm learning. Let's go. Come on, Mr. Williams.
That's
Come
all
on,
I know.
Mr. Williams. That's it. All right, house hacking. Look at that, y'all. We got a presentation in the room. Hey. All right, then we got some connectivity online. We got this expensive camera. I'm gonna ship back to Amazon, but we do have this presentation in the room, and it's cool. Lights can go off. All right, awesome. Go over one with Jasmine. Quick over one. House hacking. Yep. All right. So at the bottom it says what? Live rent free or with positive cash flow. Like cash flow, you gotta get excited when you hear it. You gotta say it like, yeah, cash flow. What's up? You invest in multi-units, man. It's about that cash flow. Like that's how your mind has to process what multifamily investing is. It's creating something to work for you when you're not working. That residual income, as Mr. P said earlier. So house hacking, by definition, it allows you to use first-time home buyer programs, which you're going to hear from shortly from Mr. P. That can be no money down. A lot of y'all like the video, y'all. So what? No money down, right? You can use first-time home buyer programs, government programs, city programs to cover your down payment, meaning you pay 0 on your down payment. By definition, you are supposed to live in at least 1 unit for 12 months. There is no one coming to your home to check. It doesn't matter if you're in Georgia or New York, Mississippi, North Carolina. They don't have house hacking monitors coming around to see, like, are you living in knock knock, right? However, by definition, you're supposed to live in 1 unit. You can rent out the remaining units, right? And if you're in an expensive area, that allows you to live rent free, right? Just depending on where you live, your sales price, your purchase price, and your rent amount. Right? If you got 2 units and 1 unit covers the rent, you live rent free. Right? You got 3 units, 2 units, maybe 1 covers the rent, the other one gives you cash flow. Maybe it takes 1, you understand what I'm saying? So it creates cash flow and you end up somewhere between living rent free and or having cash flow. All right, that's house hacking. And that is why majority, all of you, right, saw my video and that was something that stood out. You want to be able to what? Invest and pay 0 down. 0 down. That's what everybody wants to do. Yes, ma'am. And tell me your name in the back.
Gloria.
Nice to meet you, Gloria.
Yes, nice to meet you too. So do you still have to cover the closing costs even though you get assistance as far as the down payment?
Regular rules still apply for financing. Yep. And Mr. Peter go over those. I don't want to get into his presentation. Gloria. But yes, there are still closing costs associated with buying a home. But your down payment, right? Being able to take advantage of grant programs, right? First-time home buyer programs, right? We talk about Baltimore City and cities like Atlanta and New York where a lot of development is taking place, right? The city is encouraging and incentivizing people, homeowners, to purchase. right? But being the savvy investors you guys are, you're not just gonna purchase a single door and live in it. Just thinking about today, you're gonna use it, right, to purchase something that can create generational wealth. All right, so next slide. First thing you wanna do is think about when you purchasing a property is location, location, location. Location, location, location. The first word I said that was very important was cash flow. Next is location. You want to make sure you're getting a property that's going to rent out, right? And if we're going to house hack, if you're actually going to live there, funny story, I have a gentleman right now that I'm working with, and he wants to purchase in DC. He lives in Woodbridge, Virginia. He works in DC. And so it's been about 3 months with him. He came to me, he's already approved, and he finally found a property that he wanted to go and look at. Well, this property is in Southeast DC by Bolin Air Force Base. So he wanted to go do a drive-by because he has an Audi and he has Alfa Romero. And he said, I gotta go see this area to see if it makes sense for me to live here and have these cars here. I was like, well, you know, having an Audi and Alfa Romero, what is it? Alfa Romero, you know, may look weird in front of an apartment anyway, but okay. So he called me back. It's been 2 days. Literally, he texted me this morning and said, I haven't forgotten about you, Lola. I don't think that's going to be a good fit. But I seen some other properties on a different part. Now he's out of the 600K range, and now he's almost at the 800K range. Why? Because he's actually going to live there, right? So he wants to make sure it fits his own standards, so he's comfortable, and he don't come outside of his car sitting moving. So, yeah. So location, location, location. Things you guys want to think about is like the future development. A lot of cities, oh my gosh, there's so many areas. I was in Atlanta the week before last, so Conyers, Atlanta, like the whole vicinity, and development. People are the big developers are coming in everywhere. We can look at Baltimore, right? Who said they were interested in Baltimore? Okay, half the room. The development, give me some places in Baltimore you guys are familiar with or know about, or know that development is happening.
Park Heights.
Park Heights, absolutely. 21215. Yes. Where else? My aspiring Baltimore people.
What's the 4x4?
That's over,
East.
I ain't going with
It's over east.
Yeah,
That's easy. That's
yeah,
easy.
okay.
I don't know the 4x4. That sounds good.
It's like when she said the guy was going at in DC.
It's like southeast.
Okay. All right. That's Baltimore. Okay. All right. So how about online? Give me some areas that you guys that they are developing. How about in New York? Who was from New York? Looking at chat. We waiting here for you guys too. All right. So, and Southeast is a developing area too, right, in DC. So everybody didn't raise their hand for Baltimore. What are the other areas you guys are interested in? What are some other areas? Who didn't raise their hand for Baltimore? You didn't raise your hand for Baltimore. What area you in?
DC, anywhere there's a hole, they stick a building like they building.
In DC,
Yeah,
absolutely.
they are.
Absolutely.
Well,
It's really expanding all kinds of neighborhoods.
Yeah.
What about Detroit? You think that's a good place to invest? We got a lot of property up there.
They developing up there.
They got a lot of property.
Detroit, Chicago, all the major metropolitan cities are automatic.
I'm
Okay.
actually looking to go to Houston in the next few years.
Houston, yep, Houston, a lot of development in Houston.
I visit there a lot, I have friends there, so.
Okay. All right.
Next place too, real quick, Ohio. There's a lot of places in Ohio that are very inexpensive, kind of like Baltimore, if you will, but not necessarily crime. I mean, there's crime everywhere, but there's a lot that's really developing. I have a couple of people up here, just went up here, and they're starting to buy property. So that's something to consider.
And you guys, you know, you can invest anywhere,
Right.
right? You can invest anywhere. I would recommend, you know, investing in your backyard first,
Right.
because you can see it. You can go to your property, right? And you're planning, you know, you have 4 units or less, You may choose to get a property manager, you may not. If you're gonna use a property manager, then investing in a different city or state definitely makes sense, because that's their job, to oversee your property, you know, to collect your rents, have respond to maintenance requests, things like that. But I would recommend your backyard, right? So that you can learn, right? Your growth and you scaling more and more will depend on your experience, your hands-on experience, and how you learn, okay?
Kai said that a lot of developments are coming in from Brooklyn and Staten Island as well.
Brooklyn and Staten Island. Yeah.
You know, this like China, they just invested like, what, $6 billion in property over here. They don't even live over there.
Wow.
Yeah, that's a lot of property they just bought.
Well, and New York, New York has, like, their real estate is, some of my partners, my real estate partners are there, and their average home price, like, is more expensive than DC. You know, in our area, DC is the most expensive, but New York, I mean, they sell boxes, literally small condos.
$10,000.
Yeah.
Like, it is really expensive to live in New York, right? Their entry point in their real estate. So, but schools, hospitals, right? In this area, we got Morgan State, Coppin, Baltimore, right? Howard, if we're in DC. So, Bowie, if we're in Prince George's County. So you got a couple of choices. So being near school is a great idea, because you may want to rent to students. Right? You talk about if you know, having rooms, but students and getting an apartment, you can get a 2-bedroom apartment, it'd be 8 kids over there. It's like, but student housing, so you want to consider location. What's the first thing?
Cash flow.
Say it again, Mr. Williams.
Cash flow.
Cash, it's all about the cash flow, baby. Cash flow is number 1. Number 2, y'all said it, location. Yes, ma'am. All right, next slide. So total number of units, we talked about this when I asked. So back to, what did y'all write down? I said, how many properties do you want to own? What did you write, Mr. Harold?
10 or more.
10 or more properties. So are all these single doors, multifamily? Tell me about your portfolio.
Well, I want to flip.
You want to flip? Okay. So you want to flip 10 properties?
Yeah.
Okay. Not interested in cash flow at all?
I am. I think once I accumulate some money, then I'll probably start buying rent.
Buying
Flipping
rent. Okay. So you want to flip 10 properties in what time period?
Within probably about a year and a half, 2 years.
Okay. That's a doable plan. That's a little over 1.25 houses a quarter. So you can do about 2 properties, right? Every 4 months. Okay. Who else? Who wrote something down? I didn't hear. Tell me your name.
Alexis.
Alexis. How you doing, Alexis? Nice to meet you. How many units? Tell me about your rental portfolio. How many units do we want to own? How are they made? Are they duplexes? Ask them the same question.
Yeah.
Perfect.
So, I want to do both flip, fixer upper, and also rent out probably. But
Okay.
I would want to start off with flipping just to kind of get the feel of the whole business.
Okay. Do you
And-
currently own a home?
No.
You don't own a home. All right. So your first, Mr. Harold, you currently own a home?
Yes.
Okay. All right. And I asked because it's two different benefits, right? So Mr. Harold owns a home, so he can't purchase a multifamily cash flow property with no money down, because he's not a first-time home buyer. You, on the other hand, you can purchase a property with no money down, right? When we talk about flipping requires a 20 to 30% down payment, right? On top of 10% closing costs. Okay? So that means more what? Capital. Right? So I'll give you guys an example. I got a property, 4206 Righteoustown Road, that I purchased for my birthday, March. It went on the market 3 weeks ago. I purchased it for $50,000 from a wholesaler. The wholesaler charged me $10,000. So I was at a $60,000 acquisition price. My renovation costs, I budgeted from the bank for $60,000. However, I actually spent $71,000. Okay, 71 plus 60, 131. Right, but when I went to the bank, I had to put down. My cash to close out was 30. I think I did $33,000. Right now, the ARV, right, after rehab value, 190K. However, so I'm 131 in, right? My fees are about $8,000 in fees from the hard money lender. So I'm like 139 all in. The sales price of 190, right? So what that means is though I had to come to the table, right, with almost $35,000. If I were you, as a first-time home buyer, right, you guys can hear some numbers from Sean and also from Jasmine. The Jasmine situation was a little different because she decided to go the traditional route and go to student loan debt. But with if I were you to be able to purchase a home and have a down payment not of 25% but only 3.5%, right? The difference there, and then you can have that 3.5% covered for you. So there's some benefits in using that first-time home buyer loan that someone like Mr. Harold can't use because he's already used it for a traditional family home. Yes, over there.
Is it possible for you to do both in the same year?
Oh, absolutely. You can do them at the same time.
Okay.
You can do them at the same exact time. Because one is going to be financed through the government, right? The other is private hard money, not even on the government radar. Yes.
Kai
Talk about it.
Kai said, how important is having an LLC when looking into investment properties?
Oh, amazing question. And Mr. Pete can talk about, he's talking about structuring. So he's going to go over some loan programs, and he'll talk about like your options to structure, whether you use the LLC, which is a limited liability corporation, right? Or if you do it in your own name. If you're using a first-time home buyer program, Mr. Pete, it has to be in what name? Primary or LLC? Primary name. If you're doing a government, because FHA is government, when you're using private, if you're doing
Yes, sir.
a non-government loan, you can do it in an LLC or a trust or, the different ways you can set it up. But if you're using a government loan, no money down, it has to be your name. The government won't recognize your LLC. Okay? Who else want to tell me about their rental portfolio? Come on, my investors. Y'all have a rental portfolio. Come on, let's manifest this.
I'm sorry, Cheryl.
Cheryl, tell me about your rental portfolio.
About what I want to buy?
Yes,
I would probably start off with like a fourplex.
Fourplex, okay.
Building, multifamily home. And I would have to live there. I did have this opportunity before. This was like 20 years ago. Right longer than that. To buy a row of houses in Baltimore. Right a bit longer than that.
Okay.
It was only for $5,000.
I was about to say, probably was in that.
Yeah. But when we got to all the paperwork and everything, the people bailed out. So we couldn't close the deal.
Okay.
To my understanding, we didn't even know why they bailed out. They just I guess they didn't have the resources, the funds, or whatever they was projectiling towards us, they didn't have it. So my interest is, I would like to start off with buying a multi-family fourplex. I've owned a home before, but I don't own one now.
Okay.
I've owned a condo before, and I don't own that now. So that's my turn. Like I said, I just finished my final exam for real estate, so I'm ready to start investing in something until I can get the board.
Gotcha, okay. And you brought up something that just came to mind. If you owned a home before, Mr. P, and you no longer own a home, can you qualify for a first-time home buyer program?
The answer is yes.
Yeah.
The answer is yes, you guys. Yes, go ahead.
They would like to know if Mr. P is going to talk about the DSCR program.
He absolutely is. Let's go to the next slide. I just want to manifest y'all portfolio.
Let me ask you a question.
Yes.
Let's go back to the LLC. Because, people get their LLCs and they like to start dumping their, if they own homes or if they own businesses, they want to start dumping them in to their LLC. Because the most one that does it for their generation. He dumped it in and he bought like his son like 6 homes in his name for his 16th birthday.
Does he have a trust or does he have an LLC?
I think he has an LLC and a trust.
Okay.
So I don't know, but I know some of his business he had by this
Because
LLC.
you can put, so if the LLC is buried under a trust. Now, this is an area, you guys, when you talk about like trust and your business structuring, get an attorney. And the reason why I advise you to get an attorney, because they can tell you I can say, oh, it protects you for this. Like, I know it's a limited liability. Meaning if somebody sue you, they can't come out of your personal belongings, right? If it's not in your name. However, I do know that a trust has more death benefits than an LLC, right? But because I'm not an attorney, I don't want to advise you guys that far. But what I will tell you is get an attorney. A business owner. Give me a business owner. Give me somebody like Donald Trump. Do y'all think Donald Trump got an attorney?
Yeah.
Absolutely, right?
But even if you decide to put some of your businesses in your LLC, and you would say do that.
Well, when I say no, I would say do them separate. I would say do them separate. Don't dump everything in one LLC.
Right.
Do your LLC separate. You can actually open up an LLC for every property.
Okay.
Right? For every property. Again, if you're using your first time home buyer program, that property is going to be in your name, but you can put that in a trust. Trust can hold LLCs and trust can hold items in your name. So again, seeking out, gotta say, being licensed to seek an attorney. However, the more you understand about like your death, which one gives you death benefits versus which one covers you, gives you benefits if you're here today, right?
What you had just said, right? So they say like we got a business, right? Like for us, like real estate business or whatever, right? Is it true that every home that you buy, that you have to put it under a different LLC?
You don't have to. You don't have to put it under a different LLC. It is wise to put it under a different LLC.
Oh, okay.
Because it's protecting you from lawsuits.
Oh, okay. Because like I would read and they say like best to do that, and then I would read something else they said best just to everything under a trust, like put all your property under.
Because a trust can hold different. Entities. A trust is like a big umbrella. You can have this LLC there, this one there. You understand what I'm saying? A trust is a big umbrella. Different things can go under the trust. And a trust gives you death benefits. So if somebody passes, your stuff doesn't go into an estate, and your beneficiary was certain taxes.
And now also
Ask Patty if you have another question.
also
Or did I
they were
answer the
saying
question?
like I'm all over the place. But I know they were saying like the LLC in Maryland is supposed to protect you, but that corporate veil can be broken.
I might say, business structure, that's like attorney level, right? The level you are, those specific questions, right? All right, so next slide, Jasmine. So potential income, right? Actually, before I go into potential income, I'm going to let Mr. Pete, I want to switch, right? Then I will go into potential income, show you guys how to look at your rents, how to calculate those terms that I want you to be familiar with. I want you to sound like an investor. I want you to talk like an investor. I want you to be able to meet other people and know the terms, right? Because when people see who you are, that's how they pour into you, right? You ever meet somebody, they know a lot, but they don't take the time to pour into you because they feel like they don't want to have to go that far down, or right? But the more you know, the bigger rooms you can be in, the more value you can bring, and the more value people will be willing to pour into you. Okay? All right, so we're going to switch. And at this time, I'm going to bring to the front of the room Mr. Daniel Pete of Apex Mortgage.
Good afternoon, everyone, and again, thank you. My name is Daniel Pete with Apex Mortgage. I've been in the business about 25 years. One thing I love about this industry is it never stays the same. Numbers you can calculate the same, but there are so many parameters to the business, and it's so great now with all the opportunities for new investors to get into the business. With less money than you put traditionally. So that's really what we want to talk about. Let's talk about I hear a lot of people are really interested in multi-unit properties, and as Lola had mentioned, having the opportunity to, especially if you're a first-time home buyer, is to buy, get into a multi-unit property. And a lot of people take advantage of the FHA program. And because with the FHA program is because you put less money down, okay? And so they require you to put 3.5% of your own funds into, into the property you're purchasing. So that's a great way of doing it. But what's even better than that, not only can you get that, but also you can use a down payment assistance program. As you mentioned before, what that will mean is that will cover up your 3.5% that you would normally have to bring in yourself. Of course, with this market right now, it's kind of difficult, but if you had an opportunity, if you was purchasing a property that someone was willing to give you up to 6% in seller's help, that right there would almost guarantee you wouldn't have any money out of your pocket in the deal. All right? So that's one of those ways that you can do it. But with this market now, this market is pretty much, it's almost, no one's giving up any money. But they are starting to do it now since the interest rates are higher. All right, they know that people aren't rushing into their home the way it was. At one point you had maybe like 5 or 6 people trying to get to the same property. But you don't have that right now. So actually they are offering maybe 1%, 2% seller help. All right, so just keep that in mind. All right, I'm gonna go back to here. It's a bank statement program. All right, bank statement program is pretty good, and again, for those who don't want to show their tax returns and things of that nature, you have business, but a lot of people write off a lot of things. I'm sure you all would agree. The bank statement program is a good program for that. What that does is it tells you, right here, you qualify for 12 months. You have a 12-month or a 24-month bank statement that you have to show those bank statements consistently for a 12-month period. But what they do with that is they get that and they'll calculate like up to 60% of the income coming in from your business to determine what your monthly, your average monthly income is. Okay, and it's all derived from your business. So therefore, you don't have to show, like say, any tax returns or any of that. The only income they're concerned with is what you're bringing in from your business. Okay, and that's huge. Cash flow with your business is important because it will determine how much house you can buy. And that's the reason why we get that in, and then we put it through a calculating system. And what that does, it will weed out things that aren't business related, all right, to make sure that the calculation is accurate for you. For example, if you are making, you're averaging $50,000 a month, okay, you just take basically 60% of that, okay, to determine exactly what type of income that you have, all right. And also, if you own the business with someone else, they also have to factor that in. So if you're, business partner with someone else, that can be another, 50% or 10% that they would have to subtract from because you're not 100% business owned. But if you're 100% business owned, then that would be your money. So if you look for a $300,000, $400,000 home, which is, and if you are bringing in $10,000, $15,000 a month, and you don't have a lot of other assets or debt, I mean, that would be a great deal. So a lot of people are loving that as an option. Okay. So do anyone have any questions about the bank statement program? Well, y'all think it was too easy. Do anyone have any questions about the bank statement program? Okay. Well, great. All right. Well, let's go with the DSCR program. I think a lot of people like that one more so. All right. The DSCR program is a real exciting program. And do anyone or everyone in here know what DSCR stands for? No one does. Okay. It's debt service coverage ratio. Okay. So debt service, what they did was they had to come up with a program that's going to level the playing field for a lot of folks who's trying to, become investors. So they came up with this program, the DSCR program, to help that situation. All right. So, and as you can see here, like I said, just for business purpose only. So, for example, you don't even have to really own a property first. You can actually just go and, like I said, buy a multi-unit, whatever, with the DSCR program. Okay, and you become a business owner at that point. And what's important with that, because I know someone that asked that question online about LLC. Yes, if you have a business in your LLC, you can actually, run, yes.
I have some questions. So Kai said, is this program in New York?
The DSCR?
Yes.
I believe that DSR is pretty much countrywide, okay? But I would check and just make certain.
Okay, and there's 2 more questions.
Go ahead.
Okay. Somebody asked, what was the name for the down payment assistance program?
Well, it's different companies with that, so it's not a just certain name. It's different lenders that offer that service. Okay, but we do have a Chinoa program.
Can they see you in the camera?
I'm not sure.
Probably have to walk, come up a little.
Recording
Okay.
in progress.
Did we hang up on everybody on the room?
But while that's going on, like I was talking about, like I said, you can have it in your business name. If you have a business, you can put the LLC in that. Or you can still do it, but you can do it in your regular name as well. Okay, so you can take advantage of that with the DSCR program. It's really good. And you can go up to like 75%. Let's say, for example, if you own property already and you want to use the DSCR program, like myself and Lola's is doing one now, you can get cash out. And you can get cash out up to 75% of the value of your property. That's pretty strong, okay? In a lot of cases, when you're doing a cash out and if it's an investment, a lot of companies don't want you to go above 70%. But even with this program, you're able to get 75% of it. That is huge. So that's like you talking about the cash in, cash out. And that's, again, another way of getting your money, using that money and take that money and pretty much buy another property, whatever you want to do with it. So, again, that's another way to help your cash flow, people who are coming in. They back up?
Yes.
Okay. What was the next question?
The last question was, what does your credit score need to be for the bank statement program?
For the bank statement, you can really, for the 620, that's not it, but I believe about 620, even for the bank statement program, you can be like 620.
620.
Yes, you can definitely have the 620 for the bank statement program. But keep in mind, you can do this 620, but when you're dealing with money, the higher your credit score is, okay, the better your LTV is. And the LTV is your loan to value, okay? So if you have a low credit score, they may say, okay, well, because you have a 620 credit score, I'm not going to allow you to borrow against your property at 80%. But instead, you can do it, but it may 65 to 70%. Now, if you lost a lot of money, which means you have to bring more money to the table. So it's important to try to get your credit score up, at least 660. If you ever get 660 and above, the better you look, especially for that particular program, okay? But even with the DSCR program, again, anything above 660, 680, 700, it only look better for you. And it's less money out of your pocket. So the higher your credit score, the less money out your pocket, because that means you're going to have a higher loan to value. Okay. Was that the
That was
next
the last question, yeah.
Okay, great. All right, anybody have any questions about the DSCR? I mean, I think it's too easy for me. I'm scared.
I got a question. What does DSCR stand for?
Debt service coverage ratio.
I got another question. What's an example of, tell me what's an example question for the day. What is, what type of property, what could you bring to Danny? What could you purchase using a debt service, a DCSR loan? What is a DSCR loan?
You say what?
So, all right, you coming to Daniel, right? You like, all right, I want to use DSCR as my strategy to purchase, right? What type of property are you bringing to Daniel?
A multi-family.
You bringing Daniel multifamily? Daniel, they bring you a multifamily?
Yes, of course, you can
They
do
bring
that.
you.
Mhm.
Is the multifamily vacant, or does the multifamily have tenants?
It will have tenants.
It will in the future. Daniel, can they bring you a property that will have tenants in the future and do DSCR?
Yes, absolutely, and here's the deal, there's two ways of it, okay? Yes, it's always good, because they take like a ratio, like 1%, to determine whether or not it makes sense when you are using a DCR program, which means that how much rent is being collected versus how much your mortgage is going to be, all right?
So you can already have tenants in the building.
Absolutely.
So you're acquiring the property
Mhm.
from someone else?
Yeah, you can do that.
Okay.
And the other part too, let's say, for example, if you did want that, and most of these are, because they say ratio, and the purpose of that is because they want to determine how much of the investment, how much of you rent are you getting versus how much the loan, your monthly payment is going to be. So they have to determine that. And I just found this out I think that's 2 days ago. They even have it where some of them, you don't even have to have ratios at all, which is good. Of course, it's a little more pricier, it costs a little bit more, but you do have situations where someone might want to purchase a property, but they have no rent to gauge it on, or they're not receiving anything yet, okay? So that's another way, so you can still get in, even if, if you have a property that's not cash flowing right at the moment. But it's always more beneficial to have it where you do have cash flow.
So if it's already, if you're purchasing a property, you're acquiring a property from someone else, it's best that they already have cash flow.
Yeah, it's just more beneficial to you, yes. That's all. But you can do it either way.
You got a question? Come on, take
I'm sorry about you, because earlier this week I had called you. You said the house was already taken. It was up Hawkins. It was they wanted $80,000 for, and it already had tenants inside. Well, it had one tenant inside of it already.
Okay.
And I was looking like across the street was one renting for not renting, one was selling for like $215,000. I said this might be a good deal if ain't nothing major wrong with it, like major.
Okay. But like I say,
It already had tenants.
I'm giving you, but that's when the real estate to say, this is what Lola said, do your numbers. Because you want to make sure, once you get into something, it makes sense from a profitable standpoint. And she's pretty good at that, because she does her numbers first. You can look at a property, but you got to make sure your numbers are right. If not, you don't want to be on the bad side of that. Yeah. You had a question, my man?
Julian.
Okay.
There's 2 questions in the chat. Talisha said, can you use a DSCR loan to refinance a property you currently own?
And the answer is absolutely. You can even do a cash out.
And then the next question says, I already own a home with my husband. I want to get a 4-plex with my sister. Would I still qualify for any first-time home buyer's assistance?
Well, if her sister never owned a home, and yes, I mean, she can basically go in there, what's it called, non-bar occupation. So it can be first-time home only for the sister, not for her.
So, that was Kai? No,
Yes.
Kai, did that answer Kai? Can you explain what the non-borrower, what did you say that means?
Well, I mean, in other words, you're going on a loan for the purpose of strictly the income, because she doesn't qualify debt to income ratio wise. So that's when you get like a family member to come, going along with you, just so you can qualify. Although she'll still be a first-time home owner, but she would still have to, at that point, qualify for both homes, whatever debt that she has for that home, and also the help that she's given to the client.
Let me ask you a question. Oh, I'm sorry,
Oh,
are you done?
Did that make sense, Kai? Did that answer your question?
She said they both already own homes.
Mhm.
They both already own
Oh, they know
homes.
about
Well, no, so they can still do it, but it just won't be as a first-time home owner. But if they're just trying to do just like to get one for a DPA, I believe I'm going to get back with Lola on that one, because I think that there's something that we can offer that can help them, because what they try to do is take advantage of the DPA program, right, down payment assistance program. I may have an answer for that, but I'll get back with Lola on that one, so make sure that we got feedback.
So Kai, he's gonna look to see, since both of you, neither one of you are technically first-time home buyers, so you can't qualify for her first-time home buyer program, but you may qualify for another down payment assistance
Right.
program.
Correct.
Okay.
Okay, my question is, when you are acquiring a multi-family unit from another landlord, and you presenting your stuff to DSCR, you have to be able to, my question is, what should the previous landlord be turning over to you in order to present for funding?
Really nothing. I mean, I don't need anything from them, because see, let's say you purchase it from them, yes, hopefully they're going to give you whatever, what do you call it, the leases. That's really all you need.
That's all you need is the leases.
Right, because see, what happens is, the appraisal is going to have to be done on that property anyway. And they're going to do what's called a 1007. That is a rent schedule, okay? And that rent schedule would also give them information to determine what the average rent is for that property and for that area. Okay, so let's say, for example, you know, sometimes you can have folks been living in there for 20, 30 years, and the landlord may just say, hey, nice. So they've been paying $800 forever. However, but in that area, man, it's $1,800.
Right.
You know what I mean? So that happens. So that's why you want the rent schedule, so that you know, make sure you have the proper amount of rent that you can ask for in that particular area.
Okay. I was,
Talisha said, are there,
Oh, I'm sorry, yes.
So, say for instance, you're going into a business with someone else and one person's credit score is higher than the next. Would that help for the both?
You said one person higher than the other one?
Yeah, so,
But anytime when you do that, in most cases, they always go with a low credit score. They hardly ever go with the high. It's good to have someone with a higher credit score, but from a loan to value standpoint, it depends on what that one is. That's what they would derive that on in terms of how much you'll be able to acquire in terms of money, like down payment and things of that nature. Will it be 75% down payment? I mean, like 25% or 15%. Okay.
Talisha asks, are there any down payment assistance programs for people who want to buy another primary home as their new primary home?
Yeah, that's to say, like, I'm going to get back with that, because that's just almost the same question to the other person that want to know if they can just purchase another house. In other words, they want to perhaps sell that house and then buy another home. Is that what they're talking about?
Yeah.
Right. Yeah, but like I said, I think I have something for it, but I don't want to speak on it. I want to make sure the information is correct. Okay, so I'll get with Lola on that.
So I got a question. Cause y'all not just questioning Mr. Pete, we about to question y'all too. So my question is, so you asked a good question. You asked what was needed from the existing owner, right? And Mr. Pete answered leases. So leases represent cash flow, right? Yes?
yes.
All right, so leases represent cash flow. Do you think, does cash flow, having an existing tenant with cash flow, does that help you with your debts to, did you talk about DTI?
Yeah, debt to income.
Your debt to income ratio, does the rent being paid already add to your income?
Yes.
Yes?
Yes.
Yes, online? Mr. Pete?
Absolutely.
Yes, so, and this is a good time actually for Jasmine to share with you guys when she purchased her multi-unit, and which Mr. Pete helped with her as well. So Ms. Thomas. Did you? No. I was.
Yes, I did. Yeah.
But no, Jasmine had tenants, and Jasmine needed her lease because she had a debt to income ratio
Yeah, I remember.
Issue.
Right.
So Jasmine, you can share, please.
Before she shared, I have a question.
Yeah.
Now, the leases are from the date they signed.
Right.
So, and depending on where you are, rent is these like rental properties, or is it a apartment building, or is it a
This your multi, well, it could be
It
either.
doesn't matter.
But this is your
Okay.
multifamily, right? So this
Okay.
is your multifamily, you gotta, well, just let, I think her story answer. So go ahead, Jerry.
Because it could be
And come
one
to the
way
front
they,
a little bit so they
because
can
on
see
the
what
condo
happened.
bill,
Yeah,
when
all right.
everybody's paying the board.
Yep, right.
Okay, so I guess I'll start out, purchasing a duplex in Baltimore. My debt to income ratio was high because I have student loans. My student loans are about almost $100,000. So my debt is pretty high. So my debt to income, what was my debt to income?
Your income, how much did you make your salary?
Uh,
Tell me your salary.
My salary was about $40,000.
So that income was like 50 something. It was high.
It was
Yeah.
high. So what happened was, since there were tenants already in the duplex, both units were occupied. So they used those, that rent
To offset.
to offset my income, to help add it to my income, to help the debt to income ratio go lower. So that kind of helped out with my situation.
Because there's a cap, you can only go, how much?
Right. With FHA, you go 56.99%. And only time you do that, if you like above like a 620 or 640, then FHA will allow you to go up to that particular cap. But they really prefer to see you in a situation where you know, below 50%, because that means that, you're going to be able to manage your money and things of that nature better. But if you have to, 56.99% is the highest rate that they will allow you to go.
Right, and so, let me say one more thing. And so since my student loans were $100,000, the month they said my monthly payment was about $1,000 or something.
Yeah, definitely.
Even though my loans are in forbearance, they still added that in just to the equation. So-
Yeah, just to piggyback, at the time when she was purchasing FHA, okay, I'm sorry. At the time when she was purchasing FHA, a rule was that you have to take 1% of the total amount they owed to determine a monthly payment. And at that point, let's just say if it's $100,000, 1% of that, it was $1,000 that you would have, you have to show as part of her debt, which that wipes out a lot. I'm sure you would agree. Yeah, but of course, with the new, and I'm good what you said, but the new ruling now is only 0.5%. As opposed to that 1%. So now that's really helping a lot of people, purchase a home, because they lower their debt just a little bit versus, then.
I think
Question
somebody-
first.
Is it possible to get the down payment assistance program for like a triplex or a fourplex? Because I noticed.
You can go up to 4 units.
Okay,
Two to four, well, one to
Two.
four, but in
Yeah, one to
multifamily terms, 2 to 4.
Right.
We just end up getting duplexes, that's just how it happened.
okay.
Okay, with her student loan debt, that's the next question. Because when I was trying to purchase another home, probably about 6-7 years ago, and I had my student loan debt, they wanted to take my debt and add to my payment. Is that what happened to you? They lumped it like in to the money.
That's just a payment in and of itself. That's
Oh,
just a
okay.
separate payment.
So they added
It's
it
just added
into.
to the debt. So if she already had $2,000 of debt, they added that $1,000 on top of that. So now she got debt of $3,000.
Oh, okay.
So
So
I
they
think that's
dumped
what you're
it in.
saying, dumped it, when
They
you're
dumped-
saying dumped it in two, I think y'all saying the same thing.
Oh,
Right.
So, all right, these are the things that count on your credit report. Like anything that shows in your credit report counts against your debt to income ratio. They don't care about car insurance, cell phone bills. They're talking about any credit cards
Sure.
through a bank, car loans, personal loans, right, through a bank, and student loans. I think that's the loans that actually hit your credit report that impact your score, right? So even collection accounts, they'll take a percentage of those too, right? And it doesn't just automatically disqualify you for a house. And so in Jasmine's case, right, what she had at that time, if you had $100,000, she wasn't paying $1,000 a month.
Right.
It was, everybody loaned in forbearance for
Right.
50 years, mine in
Right.
forbearance. but her per the rule,
Per
the
the law.
idea is the government saying, we know this part of the government gave you a loan for 100,000. One day, we're gonna want the money back, one day. So we're gonna fictitiously say,
As a qualifier.
to qualify you, we're gonna debt load you, we're gonna pretend you paying $1,000 a month, right? On top of what you really do pay. Because she wouldn't be able to afford to pay $1,000 a month, that's why she in forbearance, right? So now, that knocked her off. So back to DSCR, it helps because this is what? Cash flow. It's income. Now, if you got rents, right, they bring you $2,000, $2,500, $3,000 a month. Now that $3,000 a month adds to the income that you already had coming in. So now you got more income, which lowers your percentage, which is how she was able to qualify. Does that make sense?
Yeah, that's better.
Real exciting. Yes.
So was it the DSCR program that you utilized for your?
I went through FHA.
No, she did the FHA program.
Because she was a first-time home buyer in Jeff Jersey.
So did you live in one of the units? You did? So like with these programs, say if you want a multi-family place where they already, all apartments are already filled, you won't be able to qualify for it? They gotta be one missing? I mean, one not there.
Now, if that's only if you use the FHA program.
I don't believe her. The way she left. She's like, I'm just saying yes.
But that's the FHA program, but you can still.
She understand it, it's not like they come around the check.
You can have that form.
It's okay, Jasmine, we won't tell.
That's a rule FHA has in place. But if you heard Lola say later, they don't have a watchdog trying to find out.
No, but I was saying, like, say I see this building over here, I wanted to purchase it, right? It's a 4-unit, but all 4 units, like, they already occupied. I wouldn't be able to still do that with the FHA loan.
Yes, you, okay, so, yes, and so, example, so Jasmine is share, you asked Jasmine a question, Jasmine answered the question, as she should have answered the question. So, we'll ask the question again, ask her the question again, I think that she's open to share.
I got it. Okay, then you do the bird method.
No, not bird,
Well, not
but
the
you
bird
live
method,
in
but
one
did you live in
method.
one of the units? You did, okay.
Okay, so this is what's required, right? So now that the long one done, we can talk. So.
I have nothing to do with what she did. That's not her job.
Yeah, she got to go to the side. So now we can talk. I was her agent at the time. She's licensed now. So what we had to provide, one were the leases, and then we also had to provide a notice to intent to vacate, right? They wanted the underwriter, right, behind Mr. Pete's, his mortgage company, they wanted to know that one of the tenants was moving. Hey, this is a duplex. The FHA rules say that one got to be vacant, that you got to live in one. When you moving in, because 2 people did. Well, the lease had to say, that it was ending and that it was an intent to vacate.
Yep, absolutely.
Did that manifest? But that's what they want to see. Okay?
Thank you.
That probably answers your question. Yeah. Okay.
And is that for Maryland, DC?
For whole country.
That's federal.
It's
That's
federal.
federal law.
Okay.
So-
Federal law, that's FHA, Federal Housing Administration, so federal.
And real fast, piggyback over what she was saying, right, about how you were saying how school loans and stuff, right? Is it a basically like a loan out there where so they take that student loan and just roll it into your mortgage?
No.
I seen one. I was looking it up and I wasn't clear on what it was saying. It was saying something about paying off the school loan.
That's for like teachers.
Okay.
Teachers can get their student loan debt removed, but.
But when I was buying a house like
No, I wasn't
6 or 7 years
saying
ago,
that.
they was gonna add that payment into my mortgage.
Did it go through?
No, because the dude was, I don't even want to.
I'm
he wasn't
about to say, I don't think it went through, because I don't think that's the thing.
Yeah, I seen no because
I've never heard of it.
No, yes, I have.
Oh, yeah, okay.
I've heard of what you're talking about.
You can do it and add it on to your
And
payment.
the bitch was saying like you had to have more than $1,000 worth of school loans, right? And it was something about when you get the loan, they pay that school loan off and put it into the mortgage.
Well, if that's what they do, if they do.
It's not used a great deal, but that's been around for years.
Yeah,
What you're
but
talking
the
about.
only reason why my deal didn't go through is because the owners
Oh, did you say they backed
backed
I didn't know why.
out. Yeah,
Gotcha.
they
Okay.
backed out. They decided that they couldn't really, their deal didn't go through,
So
so
they-
they had to pull out.
Okay.
You have a story to tell, right?
Yeah.
Come on now. Cause I'm really interested in that.
All right. Well, let's introduce who's coming up to tell the story. All right. So, back in November, as I shared, T-Shawn Sammy attended our first real estate investment 101 Build the Community event. And when she came out, she was sitting just like you guys. So she's a living testimony from an event, just like you guys are in today, that if you execute, right, if you trust who you're hearing from, if you trust us, that you too will be a first-time landlord. That's covering her shirt right now, but it's because she cold. Miss T-Shawn Sammy. So we're going to put up, as she's talking, we're just going to start putting up some images in the back.
And before she talk, I just want to let you know, because I was able to help her with the financing. But what I loved about what she did was she asked gazillions of, I ain't gonna say millions, she asked gazillions of questions. I love that. You know, because nobody had all the answers. I may not even have the answers, like I told someone, I'll find them. But that's what I encourage, you know, and that's what we do. We want to make sure that you get the right information so you can make the right decision. And then from there, she felt confident enough, she's like, okay, I'm ready to move forward. What do I do next? So.
Okay, well, my name's T-Shawn. I'm from DC, and I closed on my duplex in Baltimore January 13th. And I found Lola on Instagram because I was on a whole bunch of research, like, you know, it's the pandemic. Like, how can I get more income? People being out of job and stuff. So as I'm doing research, I'm looking up, you know, everybody doing Airbnb arbitrage, where they playing Airbnbs and apartments. And as I'm doing research, I wanted to figure out, like, okay, maybe I could buy a home and, you know, put my home on Airbnb. But also, as I'm doing research, I found what you said was house hacking.
I'm sorry. I was looking like, who must stop their phone? This is mine.
Okay. And I came across house hacking. That's where you could live in one of your units and, you know, rent the rest of the rooms out or rent the other unit out. And basically, I discovered that I could live for free. So that's what I did. Instead of house hacking, I just bought the duplex and I'm going to rent both of my units out. I do have a property manager. It's cold, sorry. I do have a property manager, and she's the one finding my tenants right now, and she found me one tenant, and I have my first unit is a 3-bedroom, 1 bathroom. That one is vacant right now, but once I get somebody in, it's gonna be going for $1,600. And yeah, my duplex has, one is a 3-bedroom and the other unit is a 2-bedroom. The 2-bedroom, I have a tenant now currently, and that's going for $1,100. So my mortgage is $1,267. So, you know, when the other tenant gets in there, once they both pay rent, no, that'll be $1,100 plus $1,600. That'll be $2,700. You know, once I pay my mortgage off, I'll still be left over with a little over $1,400. And that's enough to cover where I live now, my primary residence, and my car notes. So. The property was about $164,000.
I'm gonna put up her hood statement. That's pretty accurate.
Yeah, this is how it looked before, like, so the ones that want to do, you know, the fixer-uppers, I was pretty much trying to be a landlord and flipping at the same time. And it wasn't easy, I ain't gonna lie, like, oh, it was a walk in the park, like, I had to put some work into it. Not too much. You know, the average person that's trying to buy a home, they wouldn't need, but you guys see past that.
So let me share with T-Shawn about T-Shawn. So when she said she was trying to be a flipper and landlord, she was. We would have conversation after conversation after conversation. Then I started remembering that conversation was the conversation from 2 conversations ago. And I was like, wait a minute, we
She was starting to get frustrated with me a little.
Did you know what we talked about 2 conversations ago? But a thing to remember remember, when you guys are being a landlord, if you want to occupy your unit, right? And I'm glad,
Yeah,
that
that
was,
both was vacant.
that was a good way, because she didn't put it, I didn't put it in terms of it, because when we would speak, I would say, you're not going to live here, you're not going to live here. So it was, this floor had like a little hole in it, right? And I was
From the
like,
radiators.
yeah, I was like, go to, I said YouTube, I did a YouTube video, and it shows you how to plug a hole, right? And so get the paste and get the, you gotta, put on some, you take shoes, get your elbows a little dirty. And so, and so, like, anything you can do yourself, because you're not occupying the place. But what she just said, I think was key and gave me even more insight to your line of thinking, that, you were being both at the same time. And that's important, because even what you said, Mr. Harold, like, if you want to flip, that's a different mindset, right, than if you want to be a landlord. Because there are things called tenant upgrades, and there are things called resale upgrades. They look different. Like I said, my property in Baltimore, Ricestown Road, when I put $70,000 into it, right, that was the $70,000, you know, just putting a Band-Aid on things, right? No, that's because everything got gutted out. Everything in it is brand new. Ceramic, black, everything, right? Thank you. You say it look pretty good? Thank you. Say that loud on camera. Look pretty good. Thank you. But it's different from when you're doing rental upgrades. So one of the big things is, you know, don't try to do both. Understand when you're doing your multifamily, your buy and hold, that you want rental upgrades. What's a rental upgrade? Have you ever lived in an apartment and then you ain't have stainless steel? Have you ever lived in an apartment with no ceramic in the bathroom? That's what you want. That's a landlord who understood, I won't pay for this white refrigerator for $500 and not this stainless steel one for $1,200.
And I did have to get a new refrigerator. I had to get a refrigerator, replace the floors, I had to fix the AC, the HVAC system had a hole in it, I had to repair that.
That's the bathroom?
Yeah,
That was the before.
yeah.
And show the after.
That's your IG right there?
That's one of my stories.
Okay, so when you say duplex, you said this was a home with,
It's a house.
it's
They
a
got
house.
2 separate units. They got their own meters, their own water, their own.
Oh,
She's gonna
okay.
build an apartment. Yeah,
This
she's
is
gonna do
a-
an apartment building.
Oh, okay, so it was it dilapidated? Did you have to just like, wasn't nobody living there at all?
No, it was vacant. I mean, it was, you know, FHA, once they did their appraisal and everything, they looked through it. It's habitatable, but.
We wouldn't have been able to finance it if it was, you know, in that bad of a shape.
So it was just vacant and she just had to do some.
Yeah, I wanted
She had to do some. She had to do some cosmetics. She
Okay.
chose to do a little more on cosmetics, but like she said, which was complete transparency. Don't do both. Don't try to fix and
Oh, those
flip
were floors down there?
and be a landlord.
You cleaned them yourself, the floors?
No, the floors was scratched up real bad, so I guess I'm previous owners, but like I had to pay some people to sand the floors, shine
And,
them.
bring it back to its natural. Yeah, okay.
Yeah.
It's good.
So, oh, go ahead, Jason.
How did you go about finding your first property?
Miss Lola had me.
Yeah, Jason.
Oh, this guy doing the work, okay.
Yeah. And I told y'all she was talking frustrated with me. Every property, I was like, I don't know. We didn't go see it. We went to go see one, then somebody else bought it the next day.
Yes. That, and multi-families go quick. When y'all see a like you have investors are not thinking, and this is a good segue before I go there. Tisha, did you want to share anything? Do y'all have any other questions for Tisha? Online, y'all got any other questions for Tisha?
So you found your property manager through Lola?
No, I found my property manager online, probably Instagram or TikTok.
Okay. And she's in that area, so she oversees the property, but you still take trips down and?
No, she do all that, like, she
Okay.
handled my lease, she found one of my tenants, keep my grass cut, she replaced the refrigerator.
Oh, she do any maintenance, routine maintenance? She, if something goes wrong with the property with one of your tenants, something's not working in the unit, they call you?
Yeah, that was gonna be.
Property managers take full responsibility. They literally be you.
Okay.
How much do you pay your property manager?
10%. Well, when she found a tenant, she keeps the security deposit. The security deposit is first month's rent. She requires
first month's rent for the security deposit and then 2 months rent. So that's 3 payments. That's cool.
3 payments and 2 on my lease.
Yeah, that's good, okay.
So what was the on-market deal?
I need to
or
unmarket your information.
I didn't hear
Was
you.
it an on-market deal or?
Oh, yeah, so finding a property, it was on market, so payment assistance program, no down payment assistance program. And if you are, there are certain conditions that guidelines that it has to pass, right? It has to get an appraisal. The appraiser is going to come out and do a check off. Those repairs will have to get completed in order for you to get your financing. Now, sellers already know on the front end, if most times, if their property will pass FHA or not, right? So even when it's on market, I may see something that say hard money only, rehab loan only. If I know you're doing FHA, I won't bring that to you, right? And then I see off market sometimes they can take an FHA too. So it just depends. Online.
Yep, there's 2 questions for T-Shawn. Someone said, how do you go about finding a good contractor for renovations?
Pull up at Home Depot and
That's what it is. That's what
pull up at Home Depot or we use Thumbtack. There's contractors there. Thumbtack. There's another one. I can't think of Angie's
it is.
List.
Angie says, yeah.
Someone else said, what's the hardest part of being a landlord?
The tenants.
She said the
Jasmine said the tenants.
I don't think I have any problems right now. I'm just trying to get my second person in the bid.
That's her shit. So Jasmine has, T-Shawn has a property manager. Jasmine does not. What's the hardest part? Jasmine says tenants. T-Shawn don't even know the people.
Right, because you got somebody screening.
Yeah, she's
That's managing.
That's what you need.
Managing.
That's what I would need too. Because I want to be thinking about the next thing I'm trying to do.
But that's what she said. T-Shawn said, I realized I need a property.
Yeah.
She said she realized she needed. Why did you realize you needed a property manager?
I don't know what I'm doing, y'all. I have to pay somebody that know all the laws.
Yeah.
For her to
How much do
partner.
you pay the management?
She keep the first security deposit for my first tenant, not rent, $1,100. That's the first month's security deposit, $1,100. She keep $1,100. Then every month is 10%, so $110 for that.
10% fee.
That's not bad.
For the next one.
They ready, boom, kick her money and we done.
So depending on your needs on what works best for you, right? If you want to be that hands-on investor and manage your properties, collect your rents, you got your maintenance people, then you can do it directly, right? That's the Jasmine, okay? If you're like, I just want the cash flow, I don't want to know everything else.
But like she updates me with everything. If they need a new refrigerator, she let me know first. If AC need to be fixed, she let me know that first.
So do you have like an account for her to pull money from to fix things? Like when things go wrong, like you said, you had to replace the refrigerator.
No, what they do, the tenants do, they send her the money, then she sends me my payment, and then like I pay her from there. And if something goes wrong, she'll let me know, and then I'll send her the money.
Oh, okay.
And what you can have too, in place, you can, if you want, you can try to get a home warranty if you can sneak, kind of sneak that in. But most times, like just to have access to your account, you do CapEx. It's something called your reserve. Having money in the reserves.
Like, say for instance, you have to put all this stuff in, so you get warranties on that. And then with your loan, you have the insurance.
Your home insurance, like for fires or anything. Right, and then renter's insurance. Do you take that renter's insurance?
Yeah.
And then have to get renter's insurance.
Require them to get renter's insurance.
Yeah, and I just cover their water.
So she covers water, so you can structure if you want to cover utilities, if you don't want to cover utilities. You make them have, they not make, but they have to have renter's insurance as well.
If they don't get it, make them sign a waiver saying if anything happens, it's not me.
They're not responsible.
Yeah.
Right.
Online, Jasmine said if they don't get renter's insurance, you can also have them sign a waiver saying that you're not liable, so that your insurance doesn't have to pay for any damage to their belongings. Yes.
Someone else had a question for T-Shawn. They said, were you advised to get loans from smaller banks or credit unions?
No, I did. use any loans to build my property or fix up my property.
Oh, no, thank you.
That was literally out of my pocket, like all the maintenance work.
Is that what you're talking?
Yeah.
Ask a clarifying question. You mean loans for, and you can tell me your money if you want, loans for,
Purchasing or loan
Purchasing.
for?
I think they told her to fix it up, because she had to fix hers
Oh,
up.
okay.
So you didn't have to fix yours up?
Mine came right.
It was already together. So, and you found yours by,
Too low.
Miss Lula.
oh, okay, Miss Lola. I'm gonna have to put you on, look, important, in my look, in my contacts.
So how did the process go? Did you talk to her and then y'all got?
Alright, so let me go. Alright, what's the final do? I'm about to say, go ahead.
Okay, it was just like this. I was saying here, just like y'all. Then, like, you know, went to class, and then I walked up to Lola, let her know everything I wanted to do. And we got in contact and
Started.
Yeah, started the process.
Okay.
I called, T-Shawn actually already had her after appointment set up. We met, our call was on a Tuesday, our event was on Saturday. We were on the phone on Tuesday because we had it set up before, because she already wanted an appointment. She was sure that she wanted to purchase a home, and, you know, and she was sure she wanted to invest, right, in a multifamily property. So this is something, like I said, you guys can implement. What we're going to do, we're going to give you guys a service, see where you guys are, see what's the best and next strategy for you, right? Is it DPA? Is it first time home buyer? Is it hard money because you may just want to flip? Yes.
In terms of the loan question, they were referring to both purchasing and renovation.
Oh, okay. So,
I purchased a home through the duplex through FHA loan with Daniel. And once I got in, I started to fix everything else. That was out of my own money.
And then I think they have a question.
I realized it though.
They said, do you think that smaller banks and credit unions have better rates than others?
I can't answer that honestly, but from my experience, not all the time. And a lot of times too, when you go to those places, they don't have much flexibility. They only have like one type of product, and that's it. So it could help for some, but a lot of times when you go to BPA, not that much.
I have a question.
yes.
I know y'all said that.
Nah, questions are good.
But with FHA loans, you know how you can go take these classes and you get the percentage of, you know, you get this closing costs up front. When you're doing a multi-family duplex or whatever, is that still an option?
Well, you still do your counseling. I mean, anytime when you're doing a DPA program, they want to make sure that you do go through the program so you can understand first-time buying. That's what you do, and that's part of getting the DPA program is going through that. And then they just use that certificate to say that, okay, she's qualified, because she understands what it takes to become a homeowner.
Did you go through the program in order to not pay your closing or whatever? Did you get a certificate?
I did
I know.
a certificate, but
It was
like a.
It's not back in the day. The certificates now is dangerous. They send you a thing, say, answer these 10 questions, and you click answer. That's what you're on. It's not like the full blown how it used to be, you know, you gotta go sit and get some hours.
Right.
It was like, watch this 10-minute video, answer these 5 questions after, and now you're ready to buy a home.
Oh, okay.
Yeah, it's very, it's not how it used to be. Yes.
But you still have to cover the closing costs?
I did. Yeah. I did my, what was it called, the EDM?
Earnest money
The
deposit?
EMD.
Yeah, that I paid that, and then just the remainder was the closing costs.
Yeah. So closing costs is 2 parts. You got a down payment. When you see no money down, that means down on your down payment. It's 3.5% for FHA. That's what the program will cover. But then you got something called closing costs. What are closing costs? Closing costs is transfer of title, right? Doing a title and lien search. What's a lien search? Meaning somebody go and game and say, hey, listen, what's up? Let's play on the, play, and then I lost the bet, and then you can just take that promissory note and go down to the court building, and now if I sell my home, you get a piece of it, right? So to make sure the title is clean and free of liens, right? It's how the mortgage loan officer gets paid. It's how the real estate agent gets paid. Your taxes are prepaid. They don't wait, because when you get your mortgage, it's your principal, your interest, your taxes, your mortgage insurance, and your hazard insurance. Hazard is, like you said, if there's damage or something, to the home. All that's in your loan. They don't wait till the month that you pay your taxes. They put 3 to 4 months in something called reserves so that they can pay it in advance, all right? Because the government will do what? Foreclose on your home if taxes aren't paid, okay? So you want it all included, yes.
Could you buy a house that just, I mean, like a tax lien on a home? That
With,
is old?
with FHA? Or
No, just like straight up.
Yeah. Straight up, yeah. You can buy any type of home straight up, but the advantage is, which I strongly recommend, is using other people's money.
I was saying, because I know a lot of the times, they don't owe that much. They could owe probably like a couple of
Something.
thousand.
They can
But-
always buy after.
I was about to say.
Yeah, I know, but they get a certain amount of time, and if they don't meet that time
Yeah,
period,
of course. It's
then
risk
it's
associated
like,
with it.
you know, the house could already be in good condition, and you just paying a couple of thousands of dollars.
Yeah, but they can always pay that little couple of $1,000 back.
No, I'm saying, what if they don't?
Then yeah.
Then you rent.
Yeah.
But if they do, you don't, right? So there's so many strategies, you guys, like where you can find homes, because you can, like you said, you can go direct to seller and look for distressed homes. You know, if you want that, you may run across somebody who do owe taxes and who do want a little bit of money. So just depending. Maybe a question online first. Yeah.
Yes, I think Mr. Brown had a question first.
Oh, Mr. Hurst. Okay, sorry, Mr. Hurst.
Yeah, I'm interested in flipping, but I wanted to know if I imagine it's all about location, and I imagine that you probably have to do inspection, and you probably have to end up doing an appraisal of the property. But the projected, once you do the renovation and stuff, the projected price, how do you come to the projected price to sell the house?
So, after renovation. So it's something called comps. So what I'll do on the front end, when we talk about crunching the numbers, is saying what are the recent sales in the area for a home of the same size, close to same size, same style. We don't want to compare a Cape Cod to a Colonial, right? Or even if it's so we want to make sure that it's a comparable sales in the area, and that will give us your price per square footage, which when you look at the actual square footage of your home, you multiply that, and that's how you get that value.
Yeah. I'm just kind of curious, because I'm trying to do the math, how much money you're gonna put in this house.
And what's your return?
What's the return?
I call it reverse engineering, right? You always want to say, what's your goal? I don't care if we doing cash flow, multi-units, or you flipping. What is my goal from this? How much do I want to make? Do I want cash flow $1,000 a month? Then I need to find something where based on this mortgage payment, my mortgage is going to be this, and I need to be in the area where rents are X amount. Can y'all go back to the slides? And go ahead, you can give me, and I'm a segue, to give me one line.
Okay, so Kai had a question for the landlords. Do you have tenants that are on city programs like Section 8?
I do. Jasmine has a Section 8. I have a Section 8. I love Section 8. I got 2 Section 8. I love Section 8.
Me too.
Section 8 is great. Housing, your money is guaranteed. You screen your tenants. Screen your tenants. Call their landlord. Ask them why they moving. If they work on the side, great. They work through the government, great. What I would say for Section 8, so I have Columbia, Maryland, where, like, depending on your city, right? So Oxon Hill, Maryland, I built a 4th bedroom. These are single. These aren't multi. In Oxon Hill, I built a 4th bedroom, right? Because they was getting more money for the extra bedroom. So you can build an extra bedroom and get more money. Because what? Work backwards. Based on your goal, how much money do you want to make? So you want to screen, and same rules apply. They have to give renters insurance, right? I don't waive. Jasmine waives the right for renters insurance. I don't waive. You're going to get this renters insurance. And you're going to pay this fee for the home warranty. And if anything breaks, you fix.
Did you have to get a permit to build a 4th bedroom?
What type of question on camera is that? Sorry. I got caught out. It's like, no, I don't know.
Okay.
Did I? No. But no, I don't think I had to because it was all internal. I didn't have to bump out anywhere. So once I didn't have to, it was just walls.
Okay.
It was just
So that's like
2
two
walls
pipes
being
or
built.
something?
Yeah.
The only
Now, you wouldn't need it if it's internal like that, you wouldn't need it.
Okay.
You want to add?
That's just the only downside to Section 8 is they may not give you what you're asking for. So like I was asking $1,400 for my units. They only gave me $1,200. So that's the only downside.
Like that online. Section 8 gave report 12, 12, 14. So work backwards. Can your goal, so what's more important? So could she take a $200 pay cut if she knew her money was gonna be guaranteed every month? Was that worth it? That's up to her, right? You know what I'm saying? She could say yes, she could say no. So just work backwards. Do you crunch your numbers? Dan, you said earlier I would mention about crunching your numbers. That is the most important thing. Start with the number. You say, Lola, this is my goal. This is what I want to do. I'm gonna ask you. You ask Sean, ask Jasmine, how much money do you want to make? What is your goal? Because if you know your goal, I can bring you a solution. If I don't know your goal, if we can't identify your goal, we can't come up with a solution. So if I know you want a lump sum, then I know what? We're looking for a lump sum of money. My question is, how much? What profitability spread are you looking for? You want 40,000? You want 30? Is 20 okay? Right? I'm gotta ask you those questions so I can know what property to bring you based on how much capital you got to invest as well. Right? Dovell, one of the first questions I asked you, what's your goal? You give me your goal, I can help you come up with a solution. Right? I want to know your goal. I want to know how much money you got. Because I may need to help you adjust your goal based on your money. I need to know your credit. Right? I need to know your taxes. We filed them or not. Because maybe we can't go FHA. We may have to go DSCR. And do a bank statement program. If the tax is not there, but you got the money. Right? So because there's so many puzzles, just if you start with your goal, you can clearly right now write what your goal is. I mean money. I need a number. How much do you want to buy and hold? Do you want to fix and flip? How much money do you want? You need $1,000. You want to profit $1,000 a month. You want to profit $2,000 a month. You want $30,000. Write down your goal. I'm going to take like 30 seconds while y'all write down your goal. See, only one person was listening. Everybody else listening. Write down your goal. Write down your goal. Write down your goal. Yeah.
Alright, so Kai said, during the pandemic, did you have issues with your tenants paying rent?
I did.
Yes.
One tenant went 4 to 5 months without paying.
Could you hear Kai?
And what did you do?
I had to go through like the eviction process, but they left before they got evicted eventually.
Oh, okay.
But I did file in the courts and everything.
So pandemic, a tenant didn't pay for 4 or 5 months. And Jasmine went down to file through the eviction process, but they left before they evicted. Jasmine was hopeful they was gonna pay too. I was like, did you go to the court building? I'm gonna go. They said they gonna pay. Jasmine, they say they gonna pay. You still go to the court building. Your rent due. If you're in some areas, I know in Atlanta and Georgia, the rent be due on the 3rd, not the 5th, right? You know, no later than the 3rd. There's no later than the 5th in our area. On that next day, you file no matter what.
So they're going to do it to you whatever you
No,
do, right?
listen to me. No matter what. It costs you $20, whatever, to go file. File no matter what on the 6th. If they come and pay you on the 7th, great, you cancel. But if they don't come pay you on the 7th,
It's still a month.
then it's the 17th. And then it's the 29th. You file no matter what, period.
And you shouldn't take a partial payment?
You file no matter, yeah, you take the money, but you file no matter
No,
what.
I asked you that, right? Because they say like in your situation, they say like the tenant owes you, right? So they said you got like 30 days or something like that.
What?
That, I don't know. But basically, right? That's what I'm gonna say. You can right. So how you had the tenant, right? In the group that I'm in, she said she had the same problem, but she took a partial payment from them, right? So whatever that time period is to be able to take them to court, it starts all over again because you took a partial payment.
Because you took the partial payment?
I think so. I think I know what she's talking about.
To be able to take
We
them
won't
to
have,
court,
I'm about to say, we
you
won't
gotta
have.
give them like 30 days or
I
something.
think if you take a partial payment, you
At 30 days, though.
can't sue them.
That's what he's saying. I think he's saying.
Right,
you take
the 30
partial-
days.
He's saying the time.
The clock starts.
Right, the clock
You
starts.
you file on the 6th. Just go
That's fine.
file. You let the, if you took money on the 4th and it was part of the rent, and you go file on the 6th, you go in there and let the judge tell you, because you ain't gonna get into court until like the 3rd week anyway. Right? You don't get into court the next day. It takes like 3-4 weeks to get. You go let the judge tell you, or the tenant show up. But if the tenant won't show up to court, the tenant probably will have paid or come to court with money anyway. Your mind gotta be again that you need to collect your rent. You need to collect your rent. So just make sure that's the focus. Yes, mine.
And someone else said, how do you create a contract with tenants And is there any way to pass the FHA requirement of having 2 years of employment?
Hold on 1 second. I'm sorry, y'all. It's hard for me. Concentrate. Say it one more time.
How do you create a contract for tenants? And is there any way to pass the FHA requirement of having 2 years of employment? So is there any like bypass it?
Mr. Pete shared
Say that again, I'm sorry.
the way to bypass the 2-year work requirement for FHA. Can you bypass 2 years of work?
The only way you can bypass 2 years, not necessarily bypass, but let's say if you was in college, if you're in college or something like that, and you have like a transcript showing that, okay, I've only worked for 1 year, and because I was in college or something like that, yes, that can be used, because they would, basically look at that as qualifying points, coming out of school, and you only work for 1 year. But as a rule, that's even with conventional loans too. They want you to have a 2-year work history. Yeah, so it's difficult to really get around that, if you will. But again, if you're doing a different type of loan, DSCR, things like that, they're just looking at your bank history. They're not necessarily looking at your work history in that regard.
But as long as you work in the same industry.
In the same industry, right. And I mean, yes, you can change job, but it still have to be consecutive
Right.
of 2 years in the same industry.
So it's 2-year work. Did that make sense? What's his name?
It just says Motorola.
Does that make sense? Did that answer your question? All right, the first one, how do you do a contract with a tenant? So you can, use a real estate agent, right? I'm going to connect everybody with the local realtor in your city, okay? Use a real estate agent, and of course, if you're in the room, I'm here. But you want to use, a lease agreement, you can go online and go to Easy Landlords or Google, right? But again, if you're not the expert, I think T-Shawn said this, I don't know, you have to be wise enough to say what you know and what you don't know, and you don't want to put a contract together that you haven't even had a contract attorney review. So even if you get a contract offline, pay a contract attorney to look over it to tell you if it's valid and if you need to change any of your terms. As a licensed real estate agent, we already have documents that have been signed off by attorneys and approved for us to use. So that's the benefit, having documents that have already been reviewed by an attorney versus you get something on Google and you don't even know if it applies in your state or not. Okay? So let me say, you guys, we will get kicked out of the room because it's like 4:20 and I think I only had 30 minutes to shut down and online. So what I want to say, it could be real quick. I'll go over these slides really quick, right, in 10 minutes. So Rent-O-Meter and Zillow. If you want to know how much rent, when I'm saying crunch the numbers, if you're talking to me and we will go to the process, right? We can schedule. Juliana could share the link with everybody online and in the room too. I'll schedule a one-on-one with you. I want to know your goals, right? You're gonna talk to me in terms of numbers, right? We talked about manifesting here, how many units you want. But when we want a one-on-one, I want to know numbers, how much money you want, right? I want to have a real conversation. Then after that, I'm gonna forward you to Mr. P. Mr. P is gonna do what's called a credit check, because we gotta have what? Certain credit score to know which program we can shoot you in. And if you need help with the credit, don't worry about that. I'll give you guys credit hacks, okay? That part's simple. The credit part's probably the most simple than everything else, okay? After that, he'll let us know how much you qualify for, right? So we'll look at your capital, credit, your capital, know how much you qualify for. And then based on that, you told me how much money you want to make. Now we're going to say, okay, well your mortgage based on this going to be this. Then let's look at some properties and you're going to check and see. When I send you properties, you're going to go right on this website and see how much rent you can get at those properties you pick out that you like. T-Shawn, isn't this what we did for you? We over and over, crunch the numbers. We crunch the numbers, we crunch the numbers, we crunch the numbers. Right? Because one building may have maybe a triplex, maybe a duplex, may have 3 one-bedrooms. Hey, what's the rent for that? Can you take housing? Whoever asked that question, if you got all 1-bedrooms, can you take, is housing an option? Do they give people vouchers for 1-bedrooms? I think maybe, but how many people got 1-bedroom vouchers, right? Veterans, right? So do we want to limit the pool to only veterans, or you want to open up to anybody with kids? You want more people, right? So you gotta consider those things. Do you wanna take housing? Do you not? You may wanna be in an area with all one bedrooms, but this is a nice area that what working class people go to, right? So think about that. But again, it starts with a number. Next slide. So that's potential income, potential expenses. You guys already heard about that, from utilities to property management, reserve funds. For every door, save $50. Write that down. Every door, save $50. Every door, save $50. When you ask, did you use, if something happens in that unit, you're saving $50, right? You got something called reserves. If you go in and you already know the roof is bad, that's a CapEx expense. Or if like a big item is bad, you can actually see that kind of on the front end during the home inspection. Next slide. Profitability at a glance. This is like real quick. 50%. All right, real quick math. 50%. So if you want to say your estimated monthly income, so Sean gave 11 and 16, 20. That's not I don't like 11 because that's 2,700. I'm gonna say 2,600, so it's easier for math for me. So we got estimated income of 2,600, right? Times 50%. That's $1,300. We can quickly estimate that every month her expenses is gonna be $1,300. That's the 50% rule. Okay. And then we're going to take her estimated monthly income minus those estimated expenses, and that's her net operating income, right? When she got that net operating income minus the monthly mortgage, that's the cash flow that person had. That's like a quick, because again, when we looking at properties, that's experienced investor, they got a system. They're able to pick that property up quick. Right? See, Sean and I would be on the phone. I'm so visual. I remember like on the couch. I think we was sharing a note. We were doing, we were sharing a note. I literally just was sharing a note for her, and we would go in, and I would just update the numbers quickly for her, so we could see and track.
Yeah, I got to see it as she was updating it,
and she could see it like which property made more sense, right? Because we're not going to start to go look. Let me just tell you straight up. You can't say, Lola, I want to see X, Y, and Z. No, I'm not taking you to see X, Y, and Z. What we're going to do is crunch these numbers, and based on this money, we're going to decide which property makes the most sense to see. This is a business, a real estate business, okay? All right, next slide. And then this is called like back of the napkin strategy. It's the 1% rule, right? The monthly rent divided by the sales price is that's how much you're likely to cash flow. And so again, just if you can remember, either 1%, right? Gross monthly rent must be equal to or greater than 1% of the property purchase price in order for it to have a positive cash flow, right? And this is like simple. This is like experienced investors don't use it because they're used to calculating the numbers quickly, right? But if you're just new and you're looking at like literally back of the napkin, right? If you're new and you're looking at it and you're like, well, how much is what's the rents? Right? And is the rents equal to or greater than 1% of the purchase price? So if the purchase price costs $170 and you know my gross rents is $2,700, got it? That $2,700 is greater than 1% of 170 because 1% of 170 is only $1,700. Does that make sense? 170 times 1% is $1,700. Add them rents up to see if those rents are greater than that. Yes, Deshaun.
Is that rule for the entire property or per door?
That one's for the entire one.
Okay.
Yeah. For Deshaun's, I literally she ain't have to do the 1%. She ain't have to do the 1%. We went on Zillow and we went on, rental meter, but this is just like quick if you just high looking. But if you when you see properties, like take the time. If you're busy and you're moving, you gotta run this like a business. You truly gotta run it like a business, right? And so if I say I see you property, you see property, sit there and start crunching your numbers and come back right away. Like, okay, boom. Don't come back 2 days, 3 days later. It's gone, right? Next slide. Cap rate. Take a picture of cap rate. See, I was gonna give y'all. Take a picture of cap rate, screenshot cap rate, you guys. All right, so your capitalization rate tells you how quickly you will get a return on your investment. So when you hear different terms, you want to know like how does it apply? What is it used for? And I think when you understand what it's used for, then you can begin to start to use the term, or you'll recognize why a term is being used, right? So that's what cap rate is about. And when you hear people say, well, what's the cap rate, right? They're looking for, today's time, it is 5 to 10%. It'll shift again where like, honestly, like you go, like you really look for double digit cap rates. Like if I bring a deal to an investor and I tell him I got 11% cap rate, he would jump on it yesterday, right? Because that's just saying like the higher means he can get a higher return and get it quicker. So again, that's just another term. And next slide, I think that may be it. Oh, other things to consider, we just talked about how much reserves, $50. Cap X is if the roof or something, you already know going in if repairs are needed, because you're going to get a what? Home inspection. Home inspection. Especially if you're using FHA. Home inspection. If you're buying something and if your bank statement program, you can still get home inspection, the appraisal inspection. Those are two types of inspections, but they look at different things. Okay? One is for your protection, the other is for the lender's protection. All right, zoning concerns, and this one is really important. If you see a property, right, so I sent you properties, so you guys, you get properties, and you see that in the comments, it may say, oh, it's a triplex, and it's this bedroom, this, and then in the fine print it says it's not zoned. But guess what that means? It means that FHA won't finance it because it's not zoned. If it doesn't have residential multifamily 12, RMF 12, if it doesn't have zoning, then the lender cannot finance it because it doesn't have proper zoning. FHA won't recognize it as a 3-unit, 2-unit, 4-unit. And when the appraiser comes out and you try to say it's a single family dwelling because it's zoned for single family, the appraiser walks in and he sees 4 different doors, he can take the pictures and send it back in, and the underwriter will say, this is set up as a multifamily, but it ain't zoned. So you won't get financing if it's not zoned appropriately, okay? And never ever if you hear somebody say, hey, you can get zoned later. Say, let the seller get zoned in, then I'll purchase it later, okay? And exit strategy. Don't buy if you don't know how or when you can receive income. If it don't make sense, then it don't make sense. Like literally, if it don't make sense, it don't make sense. So know when you want to get income. If you're fixing and flipping, right? You need to know what's the average days on the market for a property in Baltimore. It's over 60 days. Right? So if you got a 10 to 12 week project to buy and you got 60 days sitting on the market, right? Then a buyer needs 30 to 45 days. How long is that timeline? Did you calculate that timeline in your flipping? Now you said, we said you want to do 10, 2 years, right? Yeah. So that's like 2 a quarter that you'll be running simultaneously, right? So that's your timeline, 10 to 12 week rehab. Then your acquisition will be 3 to 4 weeks. 10 to 12 rehab, 60 days on the market, 30 to 45 for the buyer to close. These are all timelines. If we get in a multifamily, right, 30 to 40, and you're using FHA, 30 to 45 days for you to close, right? Are tenants in there? Do I need to already start advertising to get a tenant? Do I need to go on Facebook Marketplace? T-Shawn?
I did. I got like 6 requests.
Yeah, as a Facebook Marketplace. You can also find leads on Facebook. You can get leads on Facebook Marketplace. I'm talking with your real estate license. I can help you get leads on Facebook. Oh, I can talk to you about that. That's why I called you. Yeah, because I gotta go. I'm already registered. Yeah, but Facebook Marketplace is a great place. Ladies.
May I have your attention, please? The law library will be closing in 30 minutes, promptly at 5 o'clock. Alright. Send your documents and reading and print jobs at the print center. Thank you.
Alright, so yeah, so being able to, I just lost my complete train. Oh, Facebook Marketplace. Finding tenants on Facebook Marketplace. If you got your license, I was just hitting the hurry to find leads because people like to rent. People like rent with the option to buy. That's another exit strategy when you have a property that you are fixing and flipping, right? That you can get if you want, because in this market, at least with the option to buy in Baltimore, can sometimes be in certain areas. like certain streets in Park Heights, lease with the option to buy is more attractive than somebody coming in and just buying it, because sometimes it's locals who buy in the area of property that's really fixed up, right? And that's my property on Ricestown Road. She can't buy until March because of a bankruptcy ordeal she did, right? So she can't buy in March. So she's lease option. I got $2,500 non-refundable fee. I got first month's rent. I got security deposit. I don't fix nothing at all. I got a tenant. I'm gonna be her landlord for 8 months, and she gonna close. If she don't close for any reason, then I keep the $2,500. She's gonna close. I'm gonna put that $2,500 towards her down payment, and I'm gonna take her security deposit and put it towards her down payment. So now she's already $4,100 in to her purchase. So you gotta be creative in the market. You gotta be creative. You gotta think outside the box, right? And I believe that is it. And we don't have to, even if it's not, we gonna say this is it. Before they come over to speak again. So thank you guys. Thank everybody online for tuning in. Oh, this one says practice your due diligence. You guys can read that. Like, do your own due diligence. Contract attorneys, real estate agent. Don't try to do this on your own. Your lender. Don't try to do this on your own. Daniel and I will talk. We're going to set up appointments to meet with everybody. We will send the calendar link out where you can pick a date this upcoming week to meet with us, to have a phone conversation with the two of us. Again, come on in, being able to tell me how much, money you want to make. Tell me how much this is a business. I'm here to help you guys create generational wealth that's done in real estate and treating it like a business. So thank y'all so much for coming today.